Are you the type of trader that struggles with understanding what market structure is doing, figuring out your higher time frame buyers, or generally just getting caught up in the chaos of the markets? Because if so, then you need to watch this video all the way to the end, because I'm going to be teaching you a super simple trading strategy that you can apply in Forex, futures, whatever you want to do, and it will make you extract profits from the markets like a sniper. So this strategy is actually called the opening range breakout. So first, let's break down the theoretical side of exactly what we're going to be looking for. So when the markets open at exactly 2:30 p.m. UK time, wherever you are in the world, just configure it and find the New York Stock Exchange open. And this is exactly when we're going to come to the charts. Now, when the very first 15-minute candle after the New York Stock Exchange open has printed, this is when we can actively start marking up our charts. Before that, you're going to do nothing. You're going to sit on your hands and simply just watch what market structure is doing. So after that 15-minute candle has printed, it's going to look something like this. It's going to have the body, it's going to have the wick. So let me just put the bottom wick on there as well. And essentially, we're just going to mark out the very high of that candle and the very low of that candle as well. So this gives us our range, our opening range, the first part of this trading strategy. The second part is we're going to wait for a breakout, and the third part is we're going to look for an entry. So it's nice and simple. We're going to keep it the bare bones. So essentially, we're waiting for price to either give us a breakout to the upside or a breakout to the downside. Now, we're not going to worry about the higher time frame bias. We're not going to worry about what's happening in the charts. All we're simply going to do is wait for price to break out on either side. Super simple. So let's say in this example, we actually get a breakout to the upside. Now, once we get this breakout, what we're going to do is wait for price to come back and retest the opening range high. Once we get that retest, we're actually then going to drop down to the lower time frame, which is going to be our execution time frame. And then we're going to look for an entry. And the entry is simply going to be a market structure shift. We're going to take our entry right there, and then we're going to ride it for a nice 1-to-1 and a 1-to-2. So that is it. Nice and simple. Now, in the opposite direction, if we get a breakout to the downside and we get a break of that low right there, we're simply going to wait for price to come back, retest that opening range low, and when we get that retest, we're going to drop down to the 1-minute time frame, and we're simply going to look for that market structure shift. And once we get that market structure shift, we're going to take our entry and then we're going to ride it lower. So it's nice and simple. All you're going to do is first identify the high and the low of the very first 15-minute candle once the New York Stock Exchange has opened. Then you're going to sit on your hands and wait for a breakout to the downside or a breakout to the upside. Once we get that, you're then simply going to wait for price to retest, drop down to the lower time frames, look for your entry, and that is it. You're simply going to follow these steps every single day, and if you follow these steps, you will be profitable. Now, I need you to watch this video all the way to the end, because I'm going to give you some real life examples of trades that we've actually taken, specifically a trade that I actually took today, and it was picture perfect. So that is in theory what we're looking for. Now, let's actually type this down into a full trading plan. So step one, we're going to mark out the high and the low of the first 15-minute candle that is printed after the New York Stock Exchange opens. Step two, we're going to wait for a breakout. So we're going to wait for a breakout to the upside or a breakout to the downside. Step three, we're going to wait for a retest, wait for price to come back and retest that breakout. Step four, drop down to the 1-minute time frame and identify a market structure shift in order for us to take an entry. Step five, take the entry at the fair value gap which caused that market structure shift. And step six, last and final step, we're going to put our stop loss above the high, and we're simply going to target a 1-to-1. Now, once we get to a 1-to-1, if you think the trade can run, then you can target a 1-to-2. But we always take the lowest hanging fruit, and the lowest hanging fruit is always going to be a 1-to-1. Nice and simple. You have all of the steps, it's replicatable. All you have to do is follow this plan. Now, we've got our trading plan. We've got the theoretical side of how we're going to trade. And the last thing we need to do is figure out on what pair we are going to trade this on. Now this works exceptionally well on the future side of things. So things such as NQ, you've got YM, you've got ES. So all of these pairs is going to work really well on, because this strategy works really well on futures. So the NASDAQ, the Dow Jones, the S&P 500, if you trade those, you can make it work. However, you can go ahead and trade this on the Forex market as well. If you want to test it out in Euro USD, GBP USD, feel free to backtest and collect that data for yourself, because it will give you great confidence when you enter the markets for yourself. But that is enough of the theoretical side. I know you guys are itching for me to jump onto the charts to show you some real life examples. So let's go ahead and do that now. So we're on the NASDAQ on the 15 minutes time frame. Now this candle right here is the 215 candle. This means the next candle that's going to be printed is going to encompass the opening of the New York Stock Exchange. So if I press next, you can see that this candle is the one that we always want to take into consideration. So what we're going to do is follow all the steps on our checklist in order to make sure that we frame up an A+ setup. So step one is to identify the high and the low of that first 15-minute candle. Now we're simply going to mark it out with a nice vertical line, and this will give us our trading range. So once we mark out the high and the low of that first 15-minute candle, we're then going to move on to the next step, which is to wait for a breakout. So if I continue to play price on, we can see that immediately we get a push to the downside. Now again, remember, I haven't worried about the overall bias. I haven't worried about the higher time frame stuff. I'm not including any of that. Now if you do go ahead and include that, you will start to turn into an advanced trader, because you will start to couple confluences together and it will actually give you a better win rate. However, if you're just starting out and you're a beginner and you just want to get into the markets, this is going to be a perfect strategy, because you don't need to worry about any of that. But having said that, we've now got the breakout to the downside. So once we've broken out to the downside, all we're simply going to do is wait for price to come back and retest that range low. So we want price to come back and touch this candle right here. We want price to retrace, and then once it comes up to here, we can then actively start to look for an entry. So we're simply going to wait around until we get that, and eventually price comes up, and finally price comes up and taps into the low of that range. So now that we've tapped in, what we're going to do is drop down to our entry time frame. So we're going to mark out the high and the low, and we've done that. We're going to move on to the next step, which is to wait for a breakout. We've done that. The next step is to wait for a retest. We've now got that retest. After that, the next step is to drop down to the 1 minute time frame so that we can start to look for an entry. So let's drop down to the 1 minute, and when we get here, what can we see? Now all we simply have to do is just follow market structure, because that is going to tell us when we get that market structure shift, which is going to indicate to us that we are ready for an entry. So at the moment, price is creating a series of higher highs, higher lows, higher highs. So what we need is for price to break below the previous higher low, indicating to us that the markets have flipped from bullish to bearish, so that we can then look for our entry. So at the moment, we're again sat on our hands and we're not doing anything. We're going to let price play out. And as you can see, eventually what does price do? It comes down and it gives us that market structure shift. So this has now told us that we've gone from bullish to now putting in a lower low, which means we've flipped bearish. So now price is indicating to us that it wants to go lower after retesting that opening range low. So we can tick off number 4, which is to drop down on the 1 minute and look for a market structure shift. We now move on to number 5, which is to enter at the fair value gap, which gave us that market structure shift. So again, nice and simple. This is the fair value gap right here. If you guys don't know what a fair value gap is, I would highly recommend going to my page. I've done a nice video which explains exactly what a fair value gap is and how you can utilize it in your day-to-day trading. But we enter at the fair value gap, so we're going to take our entry right at the open. We're going to put our stop loss just above that high, and we always target the lowest hanging fruit, and the lowest hanging fruit is a 1-to-1. So now we've got our stop loss, we've got our take profit at a 1-to-1. All we simply now need to do is wait for price to tap us in, And once it's tapped us in, we're not going to interfere with the trade. We're going to let it play out. It's either going to be a stop loss or it's going to win. So whatever happens in between, we don't care. It's either going to win or it's going to lose. That's it. We don't interfere, we don't worry, we walk away from the charts if our emotions start getting in the way. Because we are mechanical traders, we follow the plan. That is it. So once we've entered into the market, we let price chop around, and eventually, after a while, you can see price drops straight to our take profit. Now, in this case, this trade actually ran, as we can see, all the way down to here, and that would have been a nice 1 to 3.7 risk to reward. However, we always target the lowest hanging fruit, so we took profits at a 1 to 1. After that, we can also take profits at a 1 to 2. We can leave a runner open. We can go break even. We can show our stop losses, whatever you feel comfortable with doing. However, I always recommend you take profits at a 1 to 1. Secure some profits. Put something in the bag to make sure that even if you're walking away for the day, even if you've been broke, even you've walked away with a little bit of profit. So that gives us our entire checklist, and we've followed it, and we've marked out a A+ setup. This trade I actually took today, and all we did is just follow this nice 6-step checklist. So that was a nice example of a bearish scenario. Let me give you another one on the flip side, which is going to be a bullish scenario. Guys, if you ever feel like you struggle with your trading, if you don't understand what market structure is, liquidity, fair value gaps, if you struggle with any of these concepts and you're trying to trade smart money, ICT, or any of these different trading strategies, then click that link down in the description to book a call with me and my team, where we're going to audit your current trading style, figure out all of the blind spots, build that perfect trading strategy and trading plan for you to get you from point A, which is you right now, to point B, which is you becoming that consistently profitable trader that you've always wanted. So click that link right now to book a call with me and my team, and let's make this happen. So again, we're here on NQ on the 15 minutes time frame. This is the 2:15 candle, which means the next 15-minute candle is going to be the one that we actually want. So if I press next, we're going to get the next 15-minute candle, and we're going to start with our checklist. So number one, we're going to mark out the high and the low of that 15-minute candle. So once we've done that, we're going to move on to step 2, which is to wait for a breakout. So if I play price on, we can see that right there, we get a nice breakout to the upside. So next, we're going to wait for price to come back and retest the opening range high. So let's drop down to the 1-minute time frame, and we're simply going to wait for price to come back and give us an entry. So as we can see, if we follow structure, we're creating a series of higher highs, higher lows, and higher highs, right? So we've now retested the opening range high. So once we've retested the opening range high, all we're simply going to do is follow structure. So this is our higher high, higher low. So we need a higher high, a breakout to the upside. And once we get that breakout, it will confirm that we are now in a bullish trend. So once we've got that breakout to the upside, we now identify the fair value gap, which gave us that breakout to the upside. So just like that. And now all we're simply going to do is take our entry at the fair value gap, which gave us that nice break to the upside. We're going to put our stop loss just below the low, and we're simply going to target a 1 to 1, the lowest hanging fruit. So let's go through our checklist one last time to make sure we understand everything correctly. We mark out the high and the low of the first 15-minute candle after the New York Stock Exchange open. We then wait for a breakout. Once we get that breakout, we wait for a retest. Once we get that retest, we're on the 1-minute time frame looking for a market structure shift. Now in a pro trend direction, we're not looking for a market structure shift. We're looking for a breakout to the upside, a continuation. So once we get that continuation, we identify the fair value gap, which gave us that break to the upside. Once we get that, we put our entry at the open, stops below the low, and we target the lowest hanging fruit, which is a 1 to 1. And then if you feel like there is enough momentum in the market, you can then go for a 1 to 2. So we've done everything on the checklist. All we can now simply do is sit back and wait for price to come back, tap us in as it does right there. It gets very close to our stop loss, but we go straight to our take profit. So that is it, nice and simple. I don't know how far this trade goes up, so can we see if we can take it for a 1 to 2 risk to reward? Now, by now, I would already be at break even, which means I've taken partials off of this trade. I've banked some profits. I've put my stop loss at break even, so I cannot lose anything. I've already banked some profits already. So that means if we then go ahead and go for a nice 1 to 2, my runner is going to always be there. And as it does, the runner has hit our 1 to 2. So not only have we banked a 1 to 1, but we've also banked a 1 to 2 risk to reward. We didn't follow any of the higher time frame stuff. We don't know what the bias is. We don't really care about any of that. All we're simply doing is following this 6-step checklist. And if you do that all the way every single day, I guarantee that you'll be able to extract profits from these markets. I would highly recommend that you go ahead and backtest as much as possible, because if you do so, I guarantee that you will feel much more confident when you're entering the markets. That is pretty much going to wrap it up for this video. If you guys did enjoy it, then don't forget to leave a like, comment, and subscribe. And like I said, if you are struggling with your trading and you really want me to dig deep in figuring out all of the blockages that you have, the blind spots, and really building a full trading plan from A to Z, then click that link down in the description to book a call with me and my team, where we're going to go through everything, build you a roadmap, and turn you into that consistently profitable trader that you've always wanted. But I hope everyone has a great trading week, and I'll catch you guys in the next video.